So GameStop reported earnings yesterday. Ryan Cohen's in at CEO. Matt Furlong's out. Let's jump right into the numbers. So top line came in at 1.23 billion in comparison to 1.37 billion for the same quarter last year. So obviously that was a little bit disappointing, but I think it's just the economy as a whole right now and just inflation and various other factors. But the key thing to me and what stood out to me and I was happy to see was the bottom line. This quarter rather, it was negative 50.5 million compared to negative 157.9 million the same quarter last year. So that's about $107 million swing on the bottom line, despite the top line being down 141 million. So I thought that was pretty impressive being able to do that and just really shows the cost cutting take place. And if you look deeper, you look at the selling and general administrative expenses, you're looking at 345.7 million for the quarter, and that was about 27.9% of sales. In the same quarter last year, it was 452 million for selling and general administrative costs, and it was about 32.8% of sales. But I took a step further here. I looked at 2021 as well, and you had 370 million or 29% of sales. So I feel like 2021 was a little bit better to compare to, only because I feel like a lot of their expenditures in their turnaround, more of like one-time costs, things like that, took place in 2022. So being that that was the case, I wanted to see 2021 as well. So 2021, it was 29% of sales. 2023, it was 27.94%. So it was a little bit better. And it was an overall difference of about 35 million or 25 million rather. But the key thing that stood out to me that I kind of wanted to see a little bit better was collectibles. So collectibles revenue in Q1 2022 was 220 million, and that was about 16% of their sales. But this quarter came in much weaker at only 173 million and 13.98% of their sales for the category. But overall, Ryan Cohen's in at CEO. I was just watching an interview back with GME, and he was basically saying, when I'm CEO of Chewy, I'm all in. And that's why I didn't want to become CEO of GameStop. Like, I wanted to have significant control and influence. However, I didn't want to be day-to-day all in the way you have to be as a CEO. But obviously something's changed. And now Ryan Cohen's all in as CEO. And he already has his money where his mouth is. So now the fact he's CEO as well, I think it's just the next chapter, and it's very exciting. And GameStop players coming, and I think there's more coming with Web3, and that's really going to be their avenue for growth. And Marantz has described it as like hockey stick type growth, where flat, 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 and then the company starts taking off when everything's really set in place. So I think it's just another chapter, and overall, I don't think it was a bad report at all. And I don't think it was an amazing report, right? It definitely missed my expectations. I was hoping a little bit better. I think optimism was high, but here we are. I don't think it was a bad report, and I think it's just another step in the right direction, and it's going to take time, right? And it's just a little bit of a reality check. So I like the stock. Not financial advice. Thanks for watching. Have a good night.